Check 1 2. Check 1 2. How you do? Gonna go in here shortly, folks. Thanks for joining. All right. Let's get going here, folks. Hey, folks. Welcome back to Surely Sound Studio. My name is Martin. You can call me Marty. This is my show. So let's go. What's happening today? Don't you know? A lot's happening today. History is being shaped before our eyes. Are you paying attention? It's happening right in front of us. Not even behind closed doors for the most part. If you do pay attention, you can see what's happening. In this video, we're going to look at the markets. We're going to look at some Bitcoin. We're going to look at stocks. We're going to look at Bitcoin on a higher time frame. We're also going to watch a little bit of this video. It's got some good information in it. It's a theory. Makes a lot of sense to me. And we'll scroll the X and see what we're talking about. Let's start off with the Bitcoin price. And in fact, let's zoom out and start far out. On the weekly, we've had this chart going for quite some time. We're continuing to watch it. So far, we didn't really get into the DCA out too much, which is kind of like, I don't know, I thought we'd go a little higher. I thought we'd get at least like 83. But weekly doesn't look great. Like we were talking before, big wave, little wave, little wave, big wave. Happens a lot. Happens on all the smaller time frames on a regular basis. On the weekly time frame, it makes complete sense for the same thing to happen, where we have a massive green wave and then it goes into the red and everybody gets bearish and thinks it's over just for to have one more relief, short liquidation event, bull trap, whatever you want to call it. Just the way the market moves is really what it is. It's not just going to go from here and just go right straight down here. It's going to make its way, taking all the liquidity on the way down on the trip. So I don't know. I'm not convinced that we're just dropping from here. It could happen. I think though, a little bit more good news is going to come out in the next few days, and it's going to push things a little bit higher before things get a little bit worse because of more news. Or maybe they just go straight to the bad news. Who knows? But we're prepared for both ways. We're looking at this on a long-term basis, and we knew for quite some time here that we had to spend some more time in this range here. This inefficiency we said was going to get filled back in here. Still didn't really get filled, so we got to spend some more time. And look at inefficient right in the exact same range here. So now we're coming up just to fill this inefficiency, which led me to believe that we would come up into, I guess 86K is a good number, but at least 83 VWAP from the all-time high. Thought it would at least get tested. We just front run it. Maybe we do come back up with one more quick little move, and that's our bear div for the continuation down. But like right now we're still high, low, down, ooh, or more, not quite like that probably. It won't be that bad. Maybe it'll consolidate a little bit and then have a little whammy before going back up. I don't know, but I expect us still to spend some more time in the DCA zone down in here and maybe potentially come tap this box. It would make a lot of sense, just especially with multiple things. Actually, the Fed chair just changed. History of that has been negative on markets simply because of uncertainty. People don't know really what to expect. Also, you got to understand how this works with a lot of insider trading. The entire desk of politicians in the government are all insider trading. That's just the best performing trading desk there is politics. So when the new Fed chair comes in, their investments are like, okay, well, Powell's buddies are gonna leave, right? Because Powell's buddies, the people who have been making their money off of him, are gonna pull out until they secure a better relationship with the new guy and see what happens. So typically we're gonna go down a little bit while these guys are uncertain about the relationship with the new guy, and then most likely money and greed will be exchanged or negotiated about, and things will just continue the same way they always have with just a new guy. But the money will continue to drive where it ends up, and the investments will continue to drive where it ends up. So ultimately, Bitcoin is something that is down right now, as where S&P is up, and people keep asking me like, what should I buy? And then the first things they want to buy are gold or stocks. And I'm saying, you don't buy high, you buy low. So get something, pay attention to something that's been going down, because we know via inflation and soon to be hyperinflation, all assets, hard assets, will continue to rise in price. Whether you believe one thing or another, it doesn't matter. It's a long-term game. Inflation is not transitory. It's continuous. It'll never stop. It's just math and compound interest on debt that needs to be paid back. So they need to print debt, paid, print, debt, paid, print, debt, print, paid, debt, print, paid, debt, print, paid. That's what it is. Debt, print, paid. It's debt, print, paid. Right? So it's never going to end in this system anyways, unless they do the full-on like, okay, we screwed up, we can't pay the debt, we need to come up with a new system, it's going to be digital. It sounds like we don't want a CBDC. Okay, so don't fall for that. You don't want that. They're gonna say that that's gonna be part of the solution for the problem, but that's not the solution. Is Bitcoin. We've figured that out by now. The math has proved itself, especially against what it's against, valued in US dollars or any fiat currency for that matter. It's proved itself, and if you don't understand, if you don't believe the math, well, I don't know what to tell you, man. It is what it is. My opinion doesn't matter. And you have to understand that your opinion doesn't matter either. Math, statistics, that's just kind of, you follow the graph. Where's the graph going? Up and to the right. So when do you want to buy? You want to buy in the low zones, right? Buy in the low zones. Still on this guy, that's why. Buy in the low zones. Buy in the low zones. Anytime you can, buy in the low zones, because this is what happens. Alright, swing. It's getting more stable. It's not going to be as crazy as it used to be, but ultimately, same thing's going to happen. The system will continue to repeat. So let's have a little look-see at this C. Video C. If you guys don't know who Andre Shook is, you should definitely watch his videos. I've been watching him for a long time. He's, I don't know, his videos are, he's not peak performance. He used to be, a few years ago, he was at peak performance, so you could tell he was working really hard and like busting videos all day, every day. Now he's definitely he's chilled out a bit. So his videos are a little bit more selective, but still good stuff, still good information, still good theories. Let's have a listen here. Let's turn this off and get this on.
So there's a theory that I want to share with you about what actually happened when Trump went to China and brought with him.
Oh yeah, and he talks really slow, so I have to listen to it fast.
18 CEOs, Elon Musk, Tim Cook, Jensen Huang, Larry Fink from BlackRock, the most powerful business leadership ever put together for a foreign trip in American history.
The whole world is watching our meeting. Currently, transformation not seen in a century is accelerating across the globe. And
did you watch this meeting? The whole world was watching. Were you watching?
the international situation is fluid and turbulent. The world has come to a new crossroads. Can we, in the interest of the well-being of our two peoples and the future of humanity, build a brighter future together for our bilateral relations? These are the questions vital to history, to the world, and to the people.
Now, the theory says that what this was all for was a negotiation for a new monetary order, probably the most significant one in our lifetime.
The post-World War II order imposed by the US is breaking down. Would you say China has a substantial say in not dictating the next world order? Yes, of course.
And this theory goes back 40 years ago to a deal that most people have probably never even heard of, but what it did was it restructured the whole global economy. And that deal made one country super rich, and it destroyed another one for 30 years. That deal was called the Plaza Accord. What is that? In 1985, the United States had a couple problems. It had a huge trade deficit, it had a dollar that was too strong, and American manufacturers couldn't compete globally, which kind of sounds exactly like today. So the Reagan administration called in a secret meeting at the Plaza Hotel in New York City. They brought in France, West Germany, Japan, and the UK. And behind closed doors, they made a deal. The deal was other countries agreed to manipulate the currency markets to weaken the US dollar, specifically against the Japanese yen. Now, why would the US want to do that? Well, because what happened then was the yen doubled in value almost overnight. Japanese exports became really expensive, and American goods became cheap by comparison. So the trade deficit got smaller, and America became more competitive in manufacturing. Now, in exchange, Japan got something as well. Japanese companies were allowed to invest heavily into the United States. So companies like Toyota, Honda, Nissan started to build factories here in America. Japanese money flooded into US real estate, US treasuries, and US businesses. And for a little while, everyone was winning. But here's what happened to Japan. When their currency doubled that fast, their whole economy, which was mostly export-driven, sort of seized up. So Japan tried to compensate and save their economy by flooding it with cheap money. That cheap money created the biggest asset bubble in modern history. Real estate, stocks, everything went parabolic. And Japan spent the next 30 years trying to dig itself out of that hole. History calls it the lost decades. And to this day, Japan never fully recovered. Okay, so how does this relate to China? How it relates to China is because I don't think the real negotiation was about tariffs. There's a possibility that what they talked about was a rough draft of a new Plaza Accord. Why we think this is because China first proposed this deal themselves in October 2025 to Scott Bessent. Except, China's not going to let their currency get Plaza Accorded the way Japan got, because they watched Japan get destroyed by a currency revaluation. So if China's going to make a deal, it won't be a revaluation of the dollar against the yuan. It'll be done through another asset. The theory is that this asset is probably going to be gold. And if that is right, it could change everything. It's going to change what it means for the dollar, what it means for inflation, what it means for your savings, your investments, and probably the whole money system itself. So with that said, let's speculate together on why this is happening, what this deal might look like, and what this means for the US economy and our wallets. So with that said, let's get into it. Hi, my name is Andre Jick.
That was the intro. A lot of good stuff there. But honestly, makes a lot of sense, right? Like they're devaluing the dollar on purpose to inflate away the debt. So there's no possible way they're going to pay the debt, so they just inflate it away and then switch to something else. Once this doesn't, like it's happened time and time again with shells and beads and spices and coins and whatever else you want to start using. If you use the interest-based system, it doesn't work. It works for a certain period of time, but it's not sustainable. And it does ignite an economy. It ignites you to spend because you need to spend now because you can't save, or else it'll lose purchasing power. But eventually you hit the peak, and then you're like, oh yeah, life's good. It's time to kick back. Time to kick back, boys, and live off the investments. But then you get your K-shaped economy, and things fall apart. And it's like, inflation's good for people who are invested because they just get richer, right? But it's not good for people who aren't invested and save money. That's why you get the K-shaped economy. You have people that continuously are going up and people that are continuously going down. What side do you want to be on? That's where we are right now, in a complete K-shaped economy where the majority of people can't afford anything and everything's ridiculously expensive. But then you have a bunch of other people that are like, what? Like, things are so cheap right now. They literally live in a different section of the world. They live in a different economy because they have hundreds of thousands of dollars all the time. They see hundreds of thousands of dollars come in every year, whereas most people don't see $100,000 a year. You have your K-shaped economy, okay, and this is what's happening. So this eventually, the wealth inequality becomes complete madness, and eventually will break because the lower half of the K will obviously cause problems at some point. So they want to, they know that's inevitable, so they need to fix it, right? Big problem, need to fix it.
Hope you're doing well. Come for the finance and save for China. So to understand this deal and why this is being negotiated right now, we need to understand what's actually happening in the world at this moment. So let's start with what Xi Jinping said in his opening statement about something called the Thucydides trap.
Can China and the United States overcome the Thucydides trap and create a new paradigm of major country relations?
Now, the Thucydides trap is a theory from political science. It's actually named after an ancient Greek historian who studied the war between Athens and Sparta around 400 BC. And what Thucydides noticed was this. When a rising power starts threatening the dominance of an existing power, the result is almost always war. That's because fear, pride, and competition makes conflict almost inevitable. So after studying cases throughout history, they found 16 cases where a rising power challenged a ruling one. And in 12 of the 16, they ended in war. So Xi Jinping's like, hey, we both know China is a rising superpower, and we both know how this story usually ends. Let's not do that. Now, to understand why it's all happening right now, we have to look at the most important thing, which is the flow of energy. Because whoever controls the flow of energy controls leverage and what's called capital flow, aka where money goes. And we know that the Strait of Hormuz controls roughly 20% of the world's energy. And since the US Israeli war with Iran started earlier this year, the strait has been closed, and it is still closed. We can see that in the data. The official story we've been told for months is that this will get resolved quickly, right? The peace deal is coming, Hormuz will reopen, everything will go back to normal, and the stock markets have been pricing in this perfect assumption. But the data is telling us a completely different story. The story it's telling us is that the world has been drawing down its emergency oil reserves to compensate for the closure, and those reserves are starting to run out. Bloomberg reported that global oil inventories will hit operational stress levels by about June. Minimum floor levels, meaning the bare minimum that's needed to keep things like pipelines running and refineries operating, those will run out by about September. And Jeff.
Okay, so from what we've been looking at, this is August, September, October, right? Pretty sure this is where is it? There we go. Our projected line that we drew how very many months ago. Oh, look, we're back on the line. Look at that. We came back. Had a little bit of an inversion there, but we came back on the line. Look at that. And so the doodle's on. Would you look at that? All the way from up here when we said, hey guys, let's go watch Blue Jays playoff baseball because it's worth to buy your tickets at Bitcoin right now. Definitely. What a run that was. Oh, man. Sold all my Bitcoin for these tickets, baby. Let's go. Oh, man, that was awesome. That was so good. Well worth it. But yeah, hopefully we get a chance to get some of that stuff back because you got to hold on to that stuff for the long term. Take profits. If you're always buying, you can always be selling, right? Take it to your advantage. Use it as a tool. It's finally you have a monetary capture device, a tool that you can use to just, I don't know, try and get through this inflating system.
Curry, who is the ex-head of commodities at Goldman Sachs, on Bloomberg said, parts of Europe and Asia are already in shortage right now.
There's a big difference between a deficit and a shortage. We're in a deficit. Demand is above supply. We are drawing inventories. And so you're borrowing oil from the future right now.
The U.S. hits critical levels around July 4th. Even the CEOs of Chevron, ConocoPhillips, and Saudi Aramco are all giving interviews where they're saying that they're worried about the supply of oil.
The U.S. can't make up all of that supply. Inventories in the system are being drawn down, and the supply situation is tightening, and that's a concern.
Morgan Stanley put out research saying there's essentially no demand destruction in oil until prices hit $140 a barrel. But for some reason, oil is still under $100. Someone's been using the media and the paper markets to calm everything down and stabilize the whole global financial system. Right? Things like oil and rates and volatility are all being managed. They're buying the U.S. some time.
Minutes before each market-moving announcement, suspiciously timed trades made investors about $2.6 billion, betting oil prices would drop, and now the DOJ is investigating.
Now, while all of this is happening, I also think we're being sold a Hollywood story. Because the official White House press release from the Beijing summit said both Trump and Xi agree that Iran could never have a nuclear weapon. So they want people to think of this story as kind of like a Hollywood movie of good guys versus bad guys.
But here's the problem. You name the allies of China, they're all dirtbags. They're aligned with the worst people in the world. They're buying oil cheaply from Iran, keeping their war machine going. Same thing with Russia. If China stopped buying Iranian oil or threatened to do it, the war in Iran would be over.
Okay, here's how you know that all of that is theater. China has nuclear technology. Russia has nuclear technology. And Russia has been Iran's closest ally throughout this whole conflict. Russia and China have every motive in the world to pressure the West. Either one of those countries, if they wanted, could easily give Iran a nuke. Right, here you go, Iran, have fun, go use that as leverage. But they haven't done that. Why? I think it's because they already have all the leverage they need. A closed strait is slowly draining the world's oil supply, and that is worth more to Russia, Iran, and arguably China than a nuclear war. The strait being closed is their economic weapon of choice. So when they all sit down and say, yeah, Iran could never have a nuclear weapon, right? That is all just virtue signaling. It's all theater, and you're being told that Hollywood story. I believe the real story is that China and Russia are using Iran as a proxy, as a middleman, to put pressure on the West so that they could get favorable leverage in this new monetary deal. Now, who actually benefits from this is Russia, Iran, and China, because the longer Hormuz stays closed, the more urgently the United States needs to make a deal before its financial markets get exposed by the reality of the broken supply chains. Right? And China now has enough economic power to buy themselves a seat at the table of this new global monetary restructuring. So this theory says that is why Trump flew to China with 18 CEOs. He's like, all right, guys, let's make a deal. Right? And here's what this theory says they've been trying to build. And there's two parts to it. There's a part that's been made public, and there's another part that hasn't. So the public part is this. According to reports from Bloomberg and the New York Times, Trump and Xi are considering a deal where China invests $1 trillion into the United States. And most of that money will be used to build factories in America. So think manufacturing plants, supply chains, industrial infrastructure. And guess what? That is the same strategy Japanese automakers ran in the 1980s after the Plaza Accord. Toyota, Honda, Nissan building their cars in America, right? Except this time it's Chinese capital or money. And the scale of this is way bigger. Now, that sounds like a win for America. And Trump can say that this will bring back jobs, factories, investments. And in some ways it is. But if you remember, China proposed this deal first in October 2025 during negotiations in Madrid. China gave this offer to Secretary Scott Bessent. And the terms were this. China is going to flood the U.S. with investment money, but in exchange, the U.S. has to roll back national security restrictions on Chinese deals and get rid of tariffs for Chinese-owned factories built here in the U.S.
Chinese analyst Henry Wong says Beijing has leverage over Iran as its largest trading partner. He believes Xi could provide a much-needed off-ramp for Trump, but it's likely to come at a price. Xi wants a reduction in tariffs, removal of export controls on advanced semiconductors, and sanctions lifted. But what he wants most is Taiwan.
The question you have to ask is, well, why would China want this? What does China get out of investing $1 trillion into America, right? Because it's not a charity case. So think about what they're actually buying with this money. They are buying market access because America is the biggest consumer market in the world and China's export economy needs it, right? They're buying monetary legitimacy, a seat at the table when the global financial system gets restructured, and gold appreciation, right? Because if this deal triggers a repricing of gold, China's huge reserves explode in value. The $1 trillion investment could potentially pay for itself. And then there's almost certainly something else that's kind of implied in all of this, which is Taiwan and rare earths.
It's also critical for America's economy. Taiwan produces more than 90% of the world's most advanced semiconductors, crucial for AI and defense, making Taiwan ground zero for a global supply chain.
See, the coexistence between the two superpowers, between China and America, they both know that this Thucydides trap usually ends in war. But China's not going to make the same mistake Japan made. Remember, Japan let their currency get doubled in value overnight. It destroyed them for 30 years. China will not allow for a direct revaluation of the yuan against the dollar. That is their hard line. Here's what China's going to do instead. They can allow for another asset to reprice. They can use that asset as an escape valve for this repricing. That asset is most likely gold. Here's why. The United States government holds over 8,000 tons of gold. But here's the thing. On the U.S. government's books, the gold is valued at only $42 an ounce. That is still the price today, which was set way back in 1973. The actual market price of gold right now is somewhere over $4,500.
So that's nuts. So Nixon said it was going to be temporary, right? They said it was going to be temporary. Didn't say it was going to be like 50 years. But that's pretty interesting because if they do go back onto some sort of a gold standard, how is that going to work? Like, they're going to inflate. What are we going to use is the question. Like, it doesn't make any sense as far as what they're going to inflate away. Something's going to reprice. What's it's going to reprice in Canadian or in Chinese yuan, or is it going to reprice in US dollars? And how is that going to be accomplished? They're going to print a bunch of US dollars, or Chinese yuan is going to be used, or you know what I mean? Like, how is that going to work? Because if they're talking about what this sounds like to me is China moving in, building factories, bringing workers, you know, that's like industrial invasion. So if we continue to purchase things from China, I guess, Eventually, those things are just going to come here and be built right in our backyards and then given to us instead of shipped, because it's more efficient and more profitable. That's kind of scary though to think about, just so you know. Like, they're talking about factories coming here. Who's going to be working in those factories? This is an interesting time we're living in right now. And to win, you have to produce. The way that the world works, world trade, you have to have positive GDP, not artificial inflated GDP from immigration. You need actual hard work, productivity coming from your country. With the monetary policy that we all are agreed on right now, that's not necessarily the way it has to be. There is a better way to definitely do things, but with the monetary policy that we all agree on, that's what you have to do. And then a lot of people are like, well, I don't want to work because it's not worth it. I may as well just go live behind 7-Eleven at this point. And it's like, well, that attitude is why the things are so bad. If everybody continued to, I mean, I get it too. A lot of student debt and compound interest makes it very hard to accomplish, and it was a lot easier in the past. But there is ways to do it, and the unfortunate situation is that most people don't, because of simple knowledge. It has no different between, especially now with the internet. It doesn't matter where you came from. All you need is the proper knowledge of how the monetary policy works, and you can get on the upside of the K-shaped economy. The only reason it's nothing other than education of the system. Once you understand the system, you can get yourself onto the top side of the K-shaped economy. A lot of people come from nothing simply because of knowledge, and that's such a shame, because your kids go to school, and the one thing that's going to literally shape their life and the way that they live is not taught. You ever think about that? Come on. They think about, they learn good. The most thing they learn is social skills at school. You learn how to deal with other people and other influences, and understand how to regulate them, hopefully. But really, everybody could be great. The world could be great if it was just a little bit more education about the monetary policy. I don't understand why they have to keep it such a secret. Fuck. It's not that big a deal. There's enough pie for everybody. You can continue to slice the pie. There's enough pie for everybody. We don't need to. It doesn't make any sense. What is happening? You guys, study Bitcoin.
Dollars per ounce, which means the US is sitting on a balance sheet that is dramatically understated. Right? Now, China also holds insane amount of gold reserves. We don't really know how much gold they have, but they have a lot. And unlike the US, China's been aggressively accumulating more gold for years. And according to research from Luke Roman and FFTT, for 5 of the last 6 months, the single biggest export out of the United States, bigger than oil, bigger than pharmaceuticals, bigger than aircraft engines, has been gold. Something called non-monetary gold. Physical gold is leaving America. Where is it going? It's going to China, or Switzerland first, and then eventually to China. Right? Why is that such a big deal? It's a big deal because there's a rule of thumb that is held true throughout basically most of history. The rule is that the country exporting its gold is usually the one losing, and the country importing gold is usually the one winning. For example, think about what happened to Great Britain in the early 20th century. As the British Empire declined, gold left London and came into New York. And by the time World War II ended, America held more than half of all the world's gold. That gold pile is literally why the dollar became the world's reserve currency. The country with the gold writes the rules. Ironically, you don't see China and all their financial power coming to meet Trump here in America. It's the other way around, right? And right now, in 2026, the United States is the single biggest exporter of gold in the world. It's going to China. Right? This is the silhouette of a monetary transition that's happening right now. It's not 100% for sure, but these are sort of like the fingerprints of a deal that is being made in China. And here's what this gold-centric Plaza Accord might actually look like. So instead of China revaluing the yuan against the dollar, which would destroy China's export economy the way it destroyed Japan's, both sides could allow the dollar to weaken against gold. The US could mark its gold reserves to market price, and all of a sudden, the US balance sheet could look dramatically better. The debt burden would look a lot more manageable. The dollar weakens, not against the yuan directly necessarily, but indirectly against gold, which means China's huge gold reserves also go up in value as well, and China gets richer without ever having to touch the yuan exchange rate.
Okay, so there you go. So both the Chinese yuan and the United States dollar inflate or deflate value against gold, and which is obviously not just going to be gold, okay? There's also going to be basically all assets. Gold is a good one to keep an eye on, I guess, right now, but it's just it just sounds to me like inflation, just hyperinflation. We're just, hyperinflate the currency. You guys are going to hyperinflate the currency. Hope you have gold or any other assets.
Now, in return, Chinese money floods into American manufacturing. $1 trillion of investment for factories, infrastructure, jobs. The American industrial base could potentially get rebuilt, ironically with Chinese money. But either way, Trump gets to look like a hero, and China gets access to American markets. They get tariff relief. And most importantly, they get a seat at the table in this new monetary structure.
Well, the thing has been built by Chinese money for ages now. Ever since you've had Amazon, there's, everything comes from China. So it's all Chinese. It's been made in China for a long time. But, yeah, it's not sustainable when you don't make anything in your own country to trade with.
Chinese cars could potentially hit the US market within about 5 years from now. And both sides could call it a win, right? They both get to look like Hollywood heroes that save humanity by not allowing Iran to have a nuclear weapon. The reality of this is that it's most likely a coordinated devaluation of the dollar against something else. And here's what makes me think that this might be more than just a theory. The market could potentially be pricing this in. The insiders know, right? Since late March, right around the time of US Treasury markets starting to show signs of stress, the dollar's been falling against the Chinese yuan. That is the opposite of what you think would happen in a war that's supposedly designed to put pressure on China. Right? The Chinese currency has been getting stronger, not weaker. At the same time, this is the chart which shows a country's borrowing costs. These are bond yields. And you can see the Chinese government's bond yields, that turquoise line, that's been pretty steady. It's been going down. All other countries' borrowing costs, including the United States, they're all going up. That is also the opposite of what should be happening if China was hurt by any of this. So the only logical conclusion here is they're not really affected by this. Other nations are, because their borrowing costs are going up. And of course, gold has been on an absolute tear. These are just fingerprints of what could be a deal that is sort of underway. The market is sniffing it out before the announcement because smart money, they kind of know this. The insiders know. And if this deal gets done, what happens is the dollar devalues while Chinese investment restructures American manufacturing, and it sets off a chain reaction across every asset class. And what that leads to is inflation, right? Inflation is not just a side effect of this deal. It might be the whole point, because the dirty secret of modern finance is that inflation is how you make unpayable debt payable again, right? You inflate it away. $1 of debt borrowed in 2020 gets repaid in $20-30 that are worth half as much. So the debt shrinks in real terms. And the way normal people experience this is through the price of eggs, rent, and gas. But inflation doesn't hit everyone equally, right? If you own assets like stocks and real estate, gold, Bitcoin, ancient gold coins, Pokemon cards, watches, whatever, inflation makes you richer. Your assets go up in what's called the nominal value, so you get protected. This is the top half of what economists call the K-shaped economy, the line that goes up. But if you don't own assets and you're living paycheck to paycheck and your wealth is in a savings account somewhere, then inflation destroys you. Your dollar buys you less over time, which means your rent goes up, your groceries cost more, and wages don't keep pace. That is literally what's happening right now.
Literally what's happening right now. People are pizzaing when they should be French frying. Does that make sense? Because in this case, if you pizza, you're going to have a bad time. You need a French fry on that top K line, buddy. Let's go.
On the data. That's the bottom half of the K, the line that's going down. But now, layer in on top of all of that what's happening with AI.
Fry.
The AI revolution that's making the top half of the economy more productive is also getting rid of the jobs that the bottom half depends on, like customer service, right? Data entry, trucking, manufacturing, warehouse work. These changes are literally happening right now. And not everyone's going to be able to adapt because math and statistics. Transitions of this scale always leave some people behind. That creates anger. It creates low consumer sentiment, which is what we're seeing in the data. The kind that sometimes leads to social instability, protests, unrest, and potentially a breakdown of trust in institutions. And the people that are sort of engineering this monetary transition, the central planners, they've known this was coming for a long time. And that's why they've built the infrastructure to manage it. Now they call it financial innovation, digital identity, programmable currency, digital ID, the world run on algorithms. But what it really is a centralization of power. It's a digital control grid. And you need people on their best behavior when the class divide gets worse. So the tools to do that are being built right now. And if you want to learn more about that, you can watch it somewhere up here, but it's called the digital control grid. So tying all of this together, just remember that all of this is a theory. These are the most informed guesses we can make with the information available right now. So the deal might never get done, right? Hormuz might reopen tomorrow, and maybe this gold theory is completely wrong. Or maybe it's right, but we don't know exactly where this inflation gets absorbed. Will gold be the absorber of all the inflation? Will it be consumer prices? Will it be a combination of both? We don't know. And maybe the digital control grid is all just paranoia. Regardless of whether this is Plaza Accord 2.0 or whether the supply chains break and markets crash, which is also another possibility, I think all scenarios sort of point to the same thing. The dollar loses value, and the people who are
Yeah, that's this. Multiple scenarios will play out in a series of events is what's going to happen.
protected are the ones who own the assets. So the question is, which side of the K-shaped economy are you on? If your wealth is sitting in cash or in a savings account in dollars, you might be on the wrong side of the trade. The assets that make sense to hold in this environment are ones that governments can't print more of. Now, gold is the obvious choice, right? Bitcoin is another one. This is not investment advice or a call to buy anything. It's just an asset that the government can't print more of. And broadly speaking, any asset that has scarcity and utility. So far, this story is not over. This deal has probably not been signed yet. The oil crisis hasn't peaked, right? Kevin Warsh hasn't taken
Scarcity and utility. That's a good one. Nice. You fishing? Get your pole.
over the Fed yet. There's still a lot more coming. There's a lot more
Well, he did take over the Fed now.
to this story, and I'll be breaking it down as it develops, but for now, this theory makes a lot of sense. And if you want to see how I'm personally preparing for all of this, the specific assets that I'm holding, what I think of this market, and what I'm actually doing with my own money, those videos live in the premium members section. I also post more videos there, and you'll get access to the videos earlier than on the main channel, and if that is useful to you, the link is down below.
Check out his videos. He's got good stuff. Definitely should be watching all of his videos for educational purposes, because education is the difference between the K-shaped economy right now. So what he was talking about was basically exactly what it's what the charts kind of were saying would likely happen. Going back, the king anyways, the king. I don't really like S&P. I don't really the modern or the stock market to me seems like such a it's such a gamble. What's going to happen? I don't really see, like, maybe on the small time frames you see the structure, but I don't see nowadays. It's literally all speculation and gambling because of your smartphone and because of the accessibility. Back in the day, very intelligent traders were involved in the stock market and it had structure. Now it's any person on their phone that can get through setting up an app and making an account can now trade and invest in the stock market. And so kind of makes it a little less, Bitcoin is the king because it takes a little bit more of an attention span to really absorb this. And so currently right now, I think it's the best indicator of the future of markets. And Bitcoin's already dropped almost 50% or whatever it was, maybe a little over 50%, retraced a little bit, likely comes down to an overall, 60 to 70% drawdown, but still holding 40K, which was, when we were back here in 30K, you're still in the green. Even if you were buying all this time ago, you're still in the green, right? This nice little dip down here. You might get a chance. You probably won't. This will be the new support. This, because here, see the inefficiency. So right in here, like we come down into there, but that would be crazy. I mean, I don't know if that's actually gonna happen, but if that does happen, make sure you're paying attention. And it's gonna be simply because of what's happened for the last few years. Whatever the market, whatever the news is, Bitcoin was dumping all week, and then Trump tweeted, "I'm meeting with Iran again, and it's going to be good this time." And yesterday on a Saturday with low volume, very little market participants, market pumps 3% or 2% or whatever this is. And now we're kind of hitting some resistance here, a little bit of a bear div, inverted VWAP on the 1 hour. Money flow kind of comes up into the green, but is it going to be a lower green than this one, a lower green wave for a continuation and a bigger red wave? That's kind of what it's pointing at here. If you go to the medium time frames, 4 hour money flow coming up on the 4 hour, but usually, yeah, not looking too bad. Kind of also curving the wrong way though, and getting rejected by the 200 on the RSI. So typically for me, I look for shorts when we get stuck below it. If we spend some time above it and then we start to get stuck below it, look for a short. Stuck below it, look for a short. Coming up, stuck below it, looking for a short. Coming up, stuck below it, looking for a short. Coming up, stuck below it, looking for a short. Until proven otherwise, stop it out. There you get like, even if you took half of these, you get 1, 2, 3 wins maybe, and then take a stop out for change of structure. If it happens, potentially could happen. We'll see what the news is going to say, because basically that's all that's going to happen right now, short term. But ultimately, long term, we know that the news is going to try and push it down as far as it can. But ultimately, due to inflation, it will reprice, and eventually Bitcoin will be $500,000. It's not a matter of if, it's just when at this point. And I don't think I really did much Xing this week. So did I even? I didn't repost anything, doesn't look like. Did I reply to anything? Data centers aren't just about AI, they're about control over water, energy, and land. And yeah, that's probably pretty true. Because now they're talking about wanting to monetize freaking water and stuff. And it's like, come on, you guys. Like, this is ridiculous. Okay, because we have a blockchain now, we can put everything on the blockchain. Like we're just like, I knew certain things needed to be on the blockchain, and some of those things that should be on the blockchain, like voting, are not yet on the blockchain, but we're talking about putting water on the blockchain and land on the blockchain. Like, come on, you guys. It's taking a turn. It's taking a turn for not the best reasons. The technology could have been used for better, and of course, humans are going to be using it for what they shouldn't be using it for. It should be used by the public to keep everybody in check from fraud, not the parasites of the world using it to keep everybody in check. Everybody else in check. It's ridiculous. Oh yeah. United Nations faces total financial collapse. Yeah, for sure. We're running out of money, so print it. Print it. Yeah, didn't really get much into the X. But that's what it looks like to me, folks. Looks like to me like we're gonna hope, what's gonna happen? Can you continue down? Continue down and have let's see the daily here. Daily, yeah, fighting the 200 or the 50. This red line here is the 50. Losing this is never good. Breaking it was very good, and then holding it as support, that was very good. Breaking it, and now if we get caught under this as resistance, no bueno. No bueno. And we just came home once for a little touch to 200 and a little nice little kiss. All right, Mom, going back out again. Nice to see you. I'll see you again soon. I'm going out for one more little ride here. One more little ride. We got some contradicting signals here. Potentially looks like short-term pump, but might be weak. Might be weak. But unfortunately, got to pay attention to the news. What's going to happen with old DT? What's he going to say next? Freaking, you can look on Poly Markets, and if anybody out there doesn't know what Poly Markets is, you can bet on anything now, like anything. So a lot of this stuff has to do with manipulation over betting and investing, and it's not it's all a game, it's all a casino, like by design. It's terrible, but what do you do, right? Stay humble, stack sats, try not, you don't need to pay attention to that's the noise short term. It's only if you're trading, but if you're long term, stay humble, stack sats. The world will be a better place before too long, really. That's all we really needed to do the whole time, was stay humble and stack sats. Work hard, right? Work hard. Don't be useless. All right, I'm out for today. It's a beautiful day outside. Let's go. Enjoy it in the sunshine. Peace. Like and subscribe. All that fun stuff. See you on the next one. Things are getting crazy. Don't miss it. We're in a transitional period here in monetary structure. You need to understand what's happening to benefit from it. Become an investor in the future. Don't become a product of the future. All right, peace. Oh no! What am I clicking? I recommend putting your opinions aside and learning how to think logically